Silicon Valley Bank, or SVB, was a California-based bank that specialized in serving technology and innovation companies. It had more than $100 billion in assets and operated in several countries, including the Cayman Islands. SVB collapsed on March 10, 2023, after suffering massive losses from its exposure to risky loans and investments. The bank had been under regulatory scrutiny for its weak capital position and poor risk management practices. The Federal Deposit Insurance Corporation, or FDIC, took control of the bank and sold most of its assets and liabilities to First Citizens Bank, a North Carolina-based lender. The FDIC also guaranteed all domestic deposits of SVB, meaning that American customers were able to access their funds without any loss. However, not all depositors were so lucky. Customers of SVB's Cayman Islands branch, which was mainly used to support the bank's activities in Asia, were left out of the deal and placed under FDIC receivership. This meant that they were not covered by the FDIC's deposit insurance and that they would be treated as general unsecured creditors. This came as a shock to many depositors, who had thought that an earlier statement from U.S. regulators that said all SVB depositors would be made whole also applied to them. Instead, they found out that their funds had been seized by the FDIC and that their account balances were zero. Among the affected depositors were several Chinese investment firms that had used SVB's Cayman Islands branch to park their funds. They have not been able to access their money since SVB's failure and have been left in limbo. The Cayman Islands Monetary Authority, or SHIMA, the regulator of SVB's Cayman Islands branch, said it was engaging with the FDIC and other stakeholders regarding the receivership process and impact on the branch. However, it is unclear how much money the branch had at the time of SVB's failure and what are the chances of recovery for the depositors. SVB's collapse has been a painful lesson for its customers and shareholders, who have lost billions of dollars in the process. It has also raised questions about the safety and regulation of offshore banking and the risks involved in dealing with foreign financial institutions.